afternoon. Welcome to the weekly Livestock Market Update. I'm Brownfield Anchor reporter Meghan Grebner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Meghan.
Happy Father's Day weekend to you and to all who are watching. An opportunity to celebrate you. Sadly, we're not going to talk about higher prices to do that. So let's recap what happened this week in the markets.
Yeah, starting on the cattle side this week, Meghan, we lost about $2.25 on live fed cattle prices this week. Feeder cattle markets were primarily steady, but some instances of $3 higher. On the futures side, the August live cattle futures contract was really basically unclosed, down slightly relative to last week. Yet the August feeder cattle contract was down nearly $4.60. I think part of that was driven by what was a July corn futures contract that closed up 35 cents on the week. On the beef side, choice box beef prices gained $15.20 this week. So big strength there, and that was strength across the board in all components. Grilling season moving maybe in full force. Just a point of comparison, that's $71.40 above where they were a year ago at this time. So those prices are definitely moving higher. On the pork side of the equation, cash barrels and gilts this week were $2.50 higher. The July lean hog futures contract closed up a little more than $3 higher this week. The pork cutout value was also up about $3.40. When you look at the pork cutout value, it is still $20.25 below where it was last year at this time.
Scott, when we take a look at these numbers, it's been a really interesting week. The last couple of weeks specifically, I want to talk first about the cash hog market. We saw these huge moves higher. And then at the end of the week, we just kind of everything falls apart. As we look at that, what is that? What are some of those drivers? Are we talking summer grilling season? Are we talking potential concerns about supplies and how regulations come into play, thinking like Prop 12? Is that going to be a story that we're going to see for a while?
So I do think you have all of the above in that conversation. Weather, slaughter numbers, what demand looks like domestically and internationally. I think all those things have been driving us as we're searching for where's that equilibrium price and how is it moving. Maybe we in pork, for example, we were too negative here for a period of time, but been going in the other direction now of late of higher hog prices. I stop for a minute and just continue to say, I think these ag markets continue to become more inelastic, and sorry for being the economist today, but it just means that those demand and supply curves both are standing more straight up and down, which means just small movements in either one of those curves gives us a lot more volatility in prices. And so I think this is more what we're going to face going forward than might have been traditionally the case.
When we look at, you mentioned corn prices higher this week, soybean prices also were higher. Wheat saw back-to-back days of gains. When you look at the input prices going up and where prices are, what are some things that producers need to think about in terms of the correlation of prices and profitability long term?
Yeah, so I think as we look at the weather side of the equation, there are a number of areas of the country that are dry, and I think that's been pushing corn and soybean and wheat prices higher. Finding ways to protect against that, and I think about this as November soybeans today was up 50 cents. Not the day to be locking in feed costs, but to me, this all is so weather driven. We don't know yet what that crop looks like come September or so. And so I think if we get rain in some parts of the country that are most important, I often say the I states when I say that, Illinois, Iowa, Indiana, it's important what happens there, I think, in terms of where prices go. But if we get rain in those states, I think we know the direction of prices for corn and soybeans, and that will be lower. If we continue not to get rain in some of those places and we get drier and drier, We know that's going to affect yields to the negative, and we likely get higher prices. So finding a time to protect yourself is important. Unfortunately, on the hog side of the equation, I think it's becoming less likely that lower feed costs are going to help the bottom line much, just given what's unfolded the last 7 days or so.
Do we really need to zero in on knowing our cost of production at this point moving forward?
So I always say, what can you protect? How can you protect what you don't know? So absolutely, and it's back to the competition sitting next door to you, and knowing your production cost. You know whether that's a profitable opportunity to lock in risk given those relative prices. If you don't know where the break even is, how do you know whether I should be thinking about using futures options or some other strategy to reduce risk? So it becomes more and more important in these periods, especially with the volatile prices we've been seeing.
Let's take a look and shift gears, taking a look at slaughter numbers for the week. Let's run through cattle and hog numbers and how those shaped up.
Yeah, so USDA is telling us for the week ending June 17th, we'll make a run of 634,000 head of cattle. That's up 18,000 head from where we were a week ago, but down 34,000 head from the same week a year ago. On the hog side, a run this week of 2.33 million head of hogs. That's 28,000 head less than where we were last week, and 32,000 less than where we were a year ago.
How are these comparing year over year for both cattle and hog slaughter?
So cattle continues down this road of a larger percentage decline. We're down 3.7% relative to 2022 when we look at the year-to-date numbers. Hog slaughter, on the other hand, up 1.1% year-to-date. Although for those that have been listening to you and I, that percentage increase has been slowly going down. And again, we look at this week's run of 233, down 32,000 from where we were a year ago. We're slowly coming back towards the same level of hog slaughter as we had last year.
It'll be interesting too to see as we get into the quarterly hogs and pigs report, which comes out later this month.
Absolutely. I think it's a tough call right now whether or not we're going to see significant downward projections or information in terms of breeding inventory, and maybe more important, what's that sow's farrowing look like, as it's been a really tough period of time for the hog industry.
Take a look. We're going to really be consumer focused this week as we look ahead, or as we take a look back at the reports that came out. Retail prices, and I think this is really interesting, looking at both beef and pork prices overall.
Yeah, for sure. We have different things going on in those industries. When we look at the June 2023, May 2023, let me get the right month out today. Beef retail prices, $8.08 a pound, a new all-time record, 2.9% higher than where we were last month. Both steak and ground beef prices higher. I think this is the beginning of a continued discussion you and I get to have of higher beef prices moving forward. We're going to get tighter. Those choice beef retail prices are 5.3% above where they were a year ago at this time. So we're moving up in those prices. Pork retail price, on the other hand, we've really been fairly flat for much of 2023. It came in May at $4.73. It's actually down a little more than 3% relative to where it was a year ago at this time. Your favorite, bacon prices are reportedly down nearly 14% relative to where they were a year ago. So a lot of change in terms of bacon prices, and that's really been driving, I think, a lot of what we're seeing in that pork retail price. When you look at chicken prices, just so we get all three out here for a minute, May 2023 composite chicken retail price, $2.45. So let's just make sure: chicken $2.45, pork $4.73, and beef $8.08. this idea about where do consumers start to shift. I think that discussion is going to continue to unfold, and I'm not calling that today, but there's a big price difference between those different cuts of meat.
I think this is an interesting conversation going into consumer sentiment, and I don't mean to jump the gun. We saw some improvement, but if that were to start to pull back, beef demand is held relatively strong. Does it face some serious pressure knowing it is almost double what pork is at the retail price and nearly 3.5 times what poultry is?
So I think the answer is yes, and I always come back and I will first always start by saying I think there's less substitution between the meats today than there was 20 years ago. And I always say that because we consume so much meat away from home that when I make that restaurant pick, I make the meat pick. I don't really go. I sometimes say I don't go to Texas Roadhouse to eat chicken. Texas Roadhouse has chicken on the menu, but it's not the most top line of what they're doing. So those less substitution. But if those restaurants start to make some shifts in menus, they likely don't shift back very quickly either. And so that could pose longer term trouble if that kind of switching in fact happens. And so I think the beef industry has to watch, what's going on and whether or not those kind of shifts happen at some point. Thank goodness we do have strong consumer sentiment. I think that's helped keep demand, especially for those higher quality beef cuts, relatively in good shape.
I think it goes to, without mentioning too, or maybe we should mention that while retail beef prices are at $8.08 per pound, that doesn't mean that there's not sale prices or some of those other things, and there's not more value by beef products at the grocery store as well, right?
That's correct. So you can find those opportunities. I think consumers are going to see less of them as they look ahead, as beef supplies continue to tighten. And this goes back to my, USDA will say 2024 beef production down, as I recall, roughly 2 billion pounds relative to this year. We're going to get tighter. And so the chances of featuring, I think, go down in front of us on the beef front. And so, where is there a break point, and is it abrupt or not? Is it a gradual change, or is it abruptly one night we decide we don't like beef anymore? I don't want the abrupt shift. It's why when you and I talk risk management, I'll sometimes say, I hope cattlemen are thinking about things like LRP to protect the downside risk. And I'll say I want them to pay the premium and not get any indemnity payment out of that. But that's protecting the downside against this sudden change and shift in consumer demand that it may not happen, but the probability is not zero that it won't happen.
Let's talk consumer sentiment. We kind of alluded to it earlier. June's consumer sentiment did see an increase over May. What are some of the reasons that you think are maybe pushing that number higher?
Yeah, so to me, I think we continue to see signs in the general economy that inflation is slowing. So I think that's helped consumer sentiment. When you see that we have a debt ceiling outcome to get us beyond some of the issues we were worried about. I think those are the two big things that came into play when you see the June consumer sentiment data show an increase almost 8% above where it was in May of 2023, and almost, Meghan, 28% higher than where it was a year ago. Now, let's make sure 2022 year ago numbers were pretty low. So we're only starting to recover, but we're nowhere near the levels of consumer sentiment that we would have seen going into the worst of COVID. We started 2020 at a overall index of about 96 or so, and we're still setting today at 63.9.
Scott, I think that will do it for us this week. Anything else we need to touch on?
I think we've covered the major topics for the week, Megan.
All right. As we look ahead to next week, it's a pretty big one for us. Livestock slaughter, cattle on feed, and cold storage. What are some of the things that you're watching in those reports?
Well, I think the big one here, we'll continue to focus on livestock slaughter, and we look at the cattle side of the equation. What's beef cow slaughter really look like? I can hear all over the board different discussions about lack of hay and what's happening to cows and big runs in some parts of the country, other parts of the country where I think there is better grass this year. So what's happening? Are we have higher prices? Is there some parts of the country that are somehow thinking about expansion right now? I think livestock slaughter will help us there a little bit. Cattle on feed, it's just more of how tight are we going to get in the second half of this year in terms of slaughter ready cattle. And cold storage will give us a little bit of, I guess, glimpse at just the current demand situation.
All right, Scott, we will talk to you next week. Have a great weekend.
You do the same, Megan.
Cover weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments there. And for a rundown of what happens every day on the commodity markets, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.